Hey everyone, I'm your host Tom Shaughnessy and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item, nothing said on this podcast is a solicitation to buy or sell any security or token or to make any financial decisions. Also, all advertisements and podcast sponsors are strictly for informational purposes only and not endorsements of any products or services. I may personally hold tokens mentioned on the podcast, and you can view our show notes below for our complete disclosures. Hey guys, I wanted to tell you about our new podcast sponsor, Delta Exchange. If you're looking to long or short altcoins with leverage, you have to check them out. They're an altcoin derivatives exchange where you can trade futures on Bitcoin and leading altcoins with up to 100 times leverage. They have strong liquidity and low trading fees, and Delta is the best place to trade altcoin derivatives. For a limited time, you can get $10 as a welcome bonus to make your first trade on Delta Exchange. Head on over to delta.exchange/Tom to claim your welcome bonus. There's a link in the show notes below. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today, I'm thrilled to have Luke Martin on, who's an analyst and head of the Coinist Pod. Luke, how's it going?
Going well, Tom. How are you?
Good, man. How was your Thanksgiving?
Thanksgiving was good. It's still pretty damn cold here, but other than that, it was good. It was slow. The market was slow as well, so didn't have to stare at the chart or anything like that. So it was good, man. How was yours?
Yeah, man, it was good. Went back down towards the shore, had a good time there. But where did you have it out in the West?
Grew up in the Midwest, so around the Chicago area, a little bit south of that, and yeah, man. So most of the family's here, and we kind of all make our way back to somewhere in the Midwest. Some of us are spread out towards the West. I'm always on the move, but everyone comes back to the Midwest for Thanksgiving.
What's the weather like out there now?
It's not terrible, although I'm starting to realize, and I haven't even spent that much of my life in California, but I am starting to really be thankful for missing some winters. Now when I come back and it's winter and it's just a little bit cold, it's not cold enough to snow yet, but man, it's chilly. It's cold enough that I got to bundle up inside sometimes.
Oh, wow. Yeah, that'll definitely ruin a good movie if you have to wear 19 blankets.
Exactly. Probably warmer than New York, though.
Yeah, no, that's for sure. So, I mean, Luke, you have a pretty interesting background. I mean, I've known you for a while, and I've heard your background on a couple of different podcasts so far, but I'd love for you to just give our listeners kind of the elevator pitch on how you got into crypto and where you are now.
Yeah, for sure. I'll walk through it, try to hit the big points. So I was going to, went to Indiana University and was studying finance. Always kind of wanted to do either investment management or something working with alternative assets. It's funny that now I've kind of gravitated towards this, and we just so happen to be working in one of the most exciting asset classes probably in our lifetime. But I had a job out of college. I worked at an FX broker, and that was in San Francisco. And funny enough, our firm shut down, which at the time was a little bit stressful for me. It was the first job out of school. I had an expensive apartment in SF, and our company just, let's just say that the management or the CEO made some pretty poor choices, right? So that broker had to stop in the U.S. I eventually was going to go back to grad school because I wanted to get a better job and actually work in investment management. And before that, I was thinking in my head, how the hell am I going to make money while I'm in school without doing something that I just absolutely hate? And not really even that, but I didn't want to waste time. I didn't want to do just some mundane thing and spend a lot of hours just to make a little bit of money. So I wanted to think of something that could kind of earn money passively while I was also studying. And so me and a couple friends, I don't know how this came up, but I think Ethereum was probably ripping. I don't know. This was like mid 2017, early 2017. And the idea was, well, we can't mine Bitcoin on our computers. We kind of missed that. Our computers aren't powerful enough. I don't think you can do it. It all happens in China. But we had this great idea of, I think we can probably spin this up on Ethereum. Let's start mining ETH. And, we didn't think too deep through it, but it was just this idea that if we figured it out fast enough, we'd be able to make a ton of money mining Ethereum on our laptops. That obviously didn't churn out too much money, but it definitely got me just so deep into after I tried to build that minor and spent 2 or 3 months doing that and eventually went to grad school, I was like addicted to figuring out what was going on here. Mining is such a fascinating way to jump into this space. I've always been more interested in the finance side than the tech side, and the tech side's fascinating as well. But it made me, as you're building that, you're understanding how the network works, and you're really understanding, you're creating a wallet and being paid by supporting the network and all these different things. And it was around that time that, some of the ETH we would generate, I would put in some ICOs, and that evolved. And then eventually I was, a few weeks into grad school, and I was spending enough time doing this and doing well enough that I figured, you know what? I can always probably go back to grad school. Right now, I get to share my thoughts on Twitter, and apparently enough people found it interesting as well, as I was kind of sharing my thoughts and tracking themes and tracking trends and whatnot and plays, that I built an audience. And then the investments and everything were doing well enough that I said, you know what, if this doesn't work out, I can go back to school. And the counselor said the same thing. He said, I think you should go for it. And in a year or two, come back to grad school. It's always going to be here, but this might not be. So
no, that's huge. Then, it's crazy that your counselor kind of agreed with you that you should go off and do your own thing. Like, I always think the business of college, they want to wrap everybody in for the next degree. Yeah,
it was kind of wild for me to hear that as well. I mean, he said, as long as this isn't like a pot, a shot, but I showed him what it was, and I said, here are the numbers, and I think I can do this a month. And he said, okay, that works. The craziest part is I just connected with this guy on Twitter. I think his name is Tom. I don't know his last name. I don't want to butcher it. But he is starting a crypto program at the graduate school that I was attending for about a week or two. A different program. I was going to do a master's in applied finance. Is it
Tom Lombardi?
What is it? Is it Tom Lombardi? Is that his last name?
Yeah, Tom's a great guy.
I believe it is.
Yeah,
I believe it is. Yeah, so he's going to start that crypto program for MBA students at that school, and it's just wild to think. 2 years I left that school to go pursue this, and now they're literally teaching that as a course. And I imagine there's going to be a lot of kids that have that same itch after taking that course. So,
wow. Life never has a way of perfectly overlapping on our decisions, right? So, you're in grad school, you're deciding to go down the crypto rabbit hole full time. I'd be surprised if people didn't know you, but you've built an insane following on Twitter because, you're honest, you're candid, people like you, and myself included. But how did that decision come about? Like, was this a Red Bull infused, we're building a miner, screw grad school, or was this kind of like a hard decision for you?
Oh, it was pretty tough because at the time I took it. It's not like you just randomly decide you want to go to grad school and then it happens the next week. You're taking tests for 3 or 4 or 5 months. You're submitting applications to a ton of schools. I was taking the CFA at the time, so I had this kind of whole track planned out. And then immediately when I got there, I met a professor, and he said, and I told him what I was interested in. And he said, you know what, let's do some research on this. I've done research on other asset classes. This is fascinating to me. He didn't think it was much more than a bubble and kind of a flash in the pan, but he said, I would love to, kind of just co-sign your research and you can research under me. So immediately I was like, oh, this is an amazing opportunity. I think I'm finally going to be able to maybe, get a shot at a job that was actually stimulating and less mundane work. So it was a tough call. Like it wasn't I left on a whim and was happy about it. It was tough. But I just kind of couldn't look back, and I realized I told this story on to Peter McCormick when I was in the What Bitcoin Did, and it just sticks in my mind. There was this conference going on, I think like Joey Krug, Pantera, and Blockchain, Block Tower Capital, and all these groups were presenting at this conference in San Francisco. And it was the first time ever, like I was looking up info. I was like, I got to go to that conference. I got to hear what, they're investing in, what they're looking at and all this stuff. And I was like, well, I have class too. And I was like, well, I feel like I should just go for this and pursue it and meet some people and try to make the plays. And so it was just one of those things where, I don't know, I think if I ran that simulation 100 times or gave that advice to 100 kids, I'm not sure it turns out so well for everyone, but, right place, right time type thing.
Yeah, for sure. I couldn't agree more. College is such a whipsaw of emotions when you're deciding whether to go back or not go back. I've always had the opinion that, 1.5, 1.6 trillion in debt, like just record the best pre-algebra, algebra 1 class and put it on YouTube. You know what I mean?
There you go.
Yeah. And, just diving into kind of your progression here. I mean, a lot of people, myself included, know you for a lot of technical analysis. Obviously, you've expanded pretty rapidly into other areas that we're going to definitely spend more time on. But I wanted to hit on some of the technical analysis stuff that you focus on. I mean, it seems like that it's kind of hard to do for a lot of people. A lot of people look at it and they think it's just drawings on the board and lines. What's kind of your take on using TA to drive real alpha?
Honestly, I think that kind of evaluation of it, I would say most people's evaluation of it is pretty accurate, right? The hurdle or the barrier to entry to get into trading or to understanding technical analysis is quite low compared to doing something like Delphi is doing, and you guys are doing kind of very rigorous fundamental analysis and writing these reports and having a very complete understanding of, or a deep understanding, I should say, of what's happening. With TA, you can learn basics rather quick, right? And so I think that what it kind of leads to is maybe false expectations or kind of outlandish expectations of, I just learned a simple analytical tool, and this is all of a sudden going to give me predictive power and whatever it might be. I think that for not only for traders, but for investors as well, I just think about it like this: completely ignoring that quantitative data, especially in an asset class that really has no agreed upon way to fundamentally value these things, I kind of just think of it as another way to value them. So in the sense that, let's say you look at 10 different coins, you're looking at 10 different alts, or you're valuing Bitcoin or whatever it might be for the year. Sure, you could look at the market cap and say, this one is the cheapest of the 10. At the same time, let's say you're looking at 10 exchange coins and you're trying to gauge, which one is relatively the cheapest or what's the best value play there. Just by looking at how they've traded in the past 3 months, you could probably see that some have already some have already had that positive momentum. And I imagine there's one or two that are still kind of along their floor. So completely, I want to kind of temper or manage everyone's expectations. I think there's a lot of false promises that get shown, especially on social media, and this expectation that it's predictive. But I stay pretty far away from that belief. But I also strongly believe that ignoring it or saying there's no value there is also quite wrong as well. So I think it's a happy medium. It's a tool, just as fundamental analysis is.
No, that's a good point. I mean, to be honest, I don't use TA, right? Just because, one, I'm not a trader, I'm not good at it, but I definitely like to stay open to the fact that there obviously is a ton of data out there and, decades worth of math and scenarios built in that people could use. I mean, just for people new to TA, I mean, do you think that the methods that legacy Wall Street traders use can be used to trade Bitcoin, or is this a totally new world?
No, I think they definitely can. I think as a matter of fact, most of the traders who, especially the ones that I bounce ideas off of, and I think I probably have a similar approach to the market as, are a lot of FX guys. And FX is pretty technical as well. I think, if anything, technical analysis is probably going to have even more merit or more, be more successful or more easily applied, I guess I could say, in crypto, just because I think there's more inefficiencies. And all I mean by that is, if you look at stocks or really any other asset class, which are much larger by comparison, you can think about, there's this book I read. It was called The Quants. Eugene Fama has an incredible way of describing how kind of the markets price in this information. So imagine if you toss a piece of fresh meat into the water and the piranhas or all the market participants, they're kind of gobbling up that meat, right? Those are all the people, all the traders, all the investors that are taking away that alpha. So, you can imagine in a stock or in a big asset class, you're in the ocean, there's not going to be much left for you. If you're playing in a really small pond, right, kind of gobbling up those inefficiencies just happens much slower. And so there's going to be times where a great example is a week or two ago, Chinese coins are pumping and that's a real theme that's happening. There's Chinese altcoins that are rising and maybe it's just speculative. But, I just pull up a chart and I look at 5 or 6 other popular Chinese coins. NEO happens to be along support. It's getting incredible volume. And, that would never, in stocks, all those things are being priced in milliseconds. In crypto, those inefficiencies can kind of exist for a while. So I think the exact same methods work. If anything, I imagine they work better here. But once again, just managing the expectations, it's still not a holy grail. It's not predictive in any sense. But I do think you can definitely find an edge there.
Yeah, your point about inefficient markets is huge, right? I mean, we see that on the research side all the time, right? Where fundamentals lack kind of price. But to your point, I'm wondering your take, because as the market grows, like as Bitcoin grows, as crypto grows in size, the inefficiency on the trading dynamic should go down, but the space gets larger. So there's more room for larger players to enter.
Sure.
What's your take there, though, on that trade-off? Because it seems like as the space grows, we'll get larger investors and traders, but the inefficiency and the potential to profit could go down.
Sure. I mean, I think it's already happening, at least in Bitcoin. Bitcoin definitely trades different this year and last year than it did in 2017, mid 2017. Almost entirely, it would trend nonstop pretty much. And what we saw in 2018, people call it the BART pattern, but what we're really seeing is it's just more chop, right? It's not so technically pretty anymore. It's not just perfect. It trends up for 7 or 10 days and then finds a local top and will immediately trend down for another month. So I think that's already happening for Bitcoin, and whether that's the introduction of more quantitative funds or more complex strategies or just more people kind of gobbling up those inefficiencies. But I think in the alt space, I think those inefficiencies are probably going to continue to exist for a while. And it's because a lot of those assets still aren't investable, right? Like funds can't even get into some of those things if they wanted to. And it's also what makes Bitcoin that much more attractive as kind of the investment play, and viewing alts as kind of that trading opportunity or that speculative opportunity.
So, Luke, one thing that I try and think about is that since TA and technical analysis is relatable to a large array of legacy traders, people on Wall Street, global investors, et cetera, it seems like TA could be that hook that pulls everybody into crypto as a starting point. And I think we've seen that on the retail level, but I don't think we've seen that on the institutional level. Do you think that technical analysis could potentially pull in that entire base of legacy, Wall Street or FX traders?
Yeah, I mean, in a way, right? Like, I think that most of the fund, like a large institutional fund or just a large fund in general, if they have the resources, a lot of times they're going to kind of automate away what the TA strategy would be. At its core, a quantitative strategy is kind of, if you strip it down, right? It's an if-then statement. It's sure, it can be more complex than that, but it's looking for some kind of condition to be met. And that condition is based on volume, and it's based on historical price data. And then when those conditions are met, then, it's either tacking on risk, or it's taking off risk, or it's doing something, right? It's fading something. So at its core, those are TA things. It's just they're kind of automated and maybe sped up a million times for a fund. But I think you already are seeing that. Mark Dow, comes from the traditional world, and he was publicly one of the people to short up in the 18 or 17K range early 2018. And then I think he covered his shorts somewhere around 4 or 5K about 12 months later. And he still posts to this day the charts, and he said, "I have never seen an asset kind of trade like Bitcoin. It's the most technically clean asset. It's just kind of ridiculous." So I'm not sure it's TA will be the thing that draws in that many more institutions. It's definitely tacked the interest of a lot of individual and retail traders, but I'm not sure on the institutional side. Be
no,
curious.
that's fair. I'm always just trying to think of ways that we could, hook legacy Wall Street and the world in, beyond kind of the crypto echo chamber, if that makes sense.
No, it does.
And Luke, what's going into this, last question on the TA front. I'd like to discuss kind of, worst trade ever, best trade ever, what you learned from each, and, any info there.
Oh gosh, worst trade ever, best trade ever. Honestly, I would say some of the best trades were less TA. TA is kind of the execution side, right? So the same way that you're constantly looking for themes, like we just discussed on my show with, looking at the blockchains that are going to come out in 2020, you're looking at those themes like composability being a moat or developer share being a moat. Right, there's themes that you can look for in trading. There was a really bizarre thing happening last year called unit bias, right? Where like very small unit coins, unit sat coins were pumping. That was a thing. You had exchange coins kind of as a theme would do very well together. A few months ago or just last month, you had the Chinese alts pumping. So really the best play was more of a theme like that. And it was when newer coins, they were older ICOs. Loom was one of the best plays. and it just hit IDEX or one of those decentralized small volume exchanges. Obviously, TA kind of comes into effect when I want to execute, and I say, okay, what price can I get this at? Where are buyers or where are orders stacking in? But really, it was just a thing of what ICOs are outperforming. What's the theme that's outperforming? And at that time, it was projects that claimed or maybe that can scale ETH. And you started to see, quite a few of those really take off. And for some reason, no one was really interested in buying Loom after it hit the market. And I did, and it ran. But it's one of those things where it's like, was that TA that played a role there? Like, I think TA was probably a very minimal role, but it helps with execution. For sure.
Identifying the themes is huge, to your point. I mean, the most recent ones I think that we're tracking is kind of DeFi, and then zooming in on DeFi into synthetic assets like synthetics and some new ones. How much do you focus on identifying themes and being really specific? Or is it more of, hey, we have this theme, let's use TA as our execution engine to really drive in now?
Yeah, I would say themes are probably the biggest. I mean, narratives really still drive everything here. And then, like you said, TA comes in as kind of the execution side. Rarely, there are some exciting themes or exciting execution techniques that I would say I would put outside of themes. One topic or one kind of system, I guess you could call it, I used last year, was called cycle lows. And it happened right around, oddly enough, September 12th. If you look at a lot of alts this year, most of them have stopped forming lower lows and lower highs around September 10th to September 15th this year. It's kind of crazy to see it happen again. But once you have that system, let's say, alts actually do start trending up. I'm not so optimistic, but let's say they do start trending up. I don't think we have all the characteristics for that to happen. You could look at a few coins, and if they're all kind of forming their low is put in on September 10th, and let's say you look at a handful of 10 coins you like to trade on Binance, you find the 10 highest volume coins. Let's say 7 of those coins have already moved up 10 or 8 or 15% from their low. You literally just pick the 2 or 3 and overweight those that are still right along their September 10th or September 15th low, and kind of using that system that'd be a way to play a theme that really, it doesn't matter which sector or which theme that coin belongs to, but it's kind of playing the cycle low or the technical level as a theme and saying that, look, if this is an anchor, this is a reference point, these 2 or 3 coins have to be the cheaper of the 10. And maybe it doesn't mean they outperform, but I think you're setting yourself up to not only be taking, I think, a better risk bet. Right now, if they all fall, they should probably all fall back to their low. And if they all continue to outperform, I imagine the 2 or 3 that are underperforming will probably catch up. So sometimes it's purely TA, or I would say there's a system based around that. But usually it's a thematic thing. It's our exchange coins doing well, our coins that want to help Ethereum scale well do well, our large caps doing well. I think that's kind of what I focus on more.
That's huge. And let's pause this so I can give that scenario a try. We'll come back.
It's been a while, man. Alts have, the trading has become just a lot less. It's a lot less active. I mean, there's a lot less themes to take advantage of when everything's moving down. Obviously, Bitcoin's always going to be there, but it's far and few between where we have these now.
Do you think that's just because we're in this sort of a bear market and it's similar to past bear markets? Because to be honest, I mean, we're seeing a lot of really interesting work being done, a lot of great projects coming out, and honestly, just a lot of serious progress and building going on. But to your point, I guess you're right that we are kind of in that kind of bear market right now.
Yeah, it's so I mean, I'm trying to think of an environment that would cause alts to go on an extended run like that. I mean, we just still haven't had it. There aren't swarms of retail coming in, right? Exchanges aren't closing their doors or closing registrations again like they had to. And that's what led to those extended alt runs. There isn't some renewed sense of optimism that all these chains are going to replace Bitcoin or do whatever. As misguided as that might have been, that isn't here again. And I'm not here to make the call on whether or not it should return, right? That's up for the market to decide. But I think that some of those beliefs, some of that hopium, as people call it, probably drove the market. And I don't think that's returned at all. I just don't think there's new people willing to take that risk. And I don't even think there's a narrative or a story bet it on, even if those new people were here.
Hey guys, I wanted to tell you again about Delta Exchange. It's the go-to exchange for trading altcoins with leverage, and here's why. It has the highest number of altcoin futures available for trading, with several exclusive altcoin trading contracts like Engine, Basic Attention Token, and Ravencoin. It also has the highest leverage in the industry, up to 100 times, and also has the lowest trading fees. You can get 50% of your trading fees paid back to you. The platform is built by a team of Wall Street veterans, and Delta's trading platform is suitable for both novice and professional traders. View the link in the show notes below to get a $10 welcome bonus and visit the site to check out the exchange. I'm wondering how crazy do you get when you dive in? I mean, like, have you messed around with BAX futures, which surprisingly have a ton of traction now, or way more traction than I thought they would have by now? And I mean, like, have you ever done, 50 to 1 or 100 to 1 levered trading? Like, I'm just wondering how levered up, how exotic you get when you dive in.
Yeah, I haven't played on BAX platform. I've toyed around with 50 and 100x when I came to crypto, just to see, honestly, more just to understand the mechanism of some of these platforms. But no, I've never levered 50 to 100x. I would call that. That's similar to going to Vegas. So someone doing that every day isn't. They're not trying to make money. They want to be entertained.
No, for sure. I mean, so what's your take then on like quant funds in the space? I mean, it seems like there's obviously enough data for them to scalp, but on the flip side, some of it kind of comes across as, luck. If you're going 50 or 100 to 1 and you have one good trade and your returns skyrocket and you kind of attract capital,
Yeah. There are some quant funds now with pretty clearly proven track records. Alameda Research, I think, is a great example, holding three of the top 10 BitMEX leaderboard spots, and I think they've made some waves elsewhere in the industry. There are teams that are doing it that I would call probably true quant funds, and then I imagine there's some that are slowly gambling the money away. Everyone playing with the 50 to 100. I'm not sure I would even call them a fund.
Yeah, no, you're right. There definitely are legit quant funds out there. I mean, Dharma Capital's one with Andrew Keys. There's other ones out there as well, but you're right. There definitely are some legitimate ones.
They're coming. For sure.
Luke, last question on this kind of topic. What's your view on the automated trading strategies in the place? Like things like Set Protocol, potentially Invictus with their funds, like tokenized funds. Like, do you think that tokenized trading or rebalancing could kind of take the place of, the daily trader?
So I don't know enough about Set. My God, I had, I'm trying to think, Taylor Lebowitz. I believe I tweeted at him and he sent me the link, and then I still didn't go and read up on it and know as much as I should. I did just a very quick scan. I do think it's fascinating, right? I understand the basic premise. I don't understand how the token kind of fits in yet. But I think in large part, tying TA in with all of this, if anyone is learning TA, especially if they're new and they're an investor or a trader, first of all, I'd kind of caution against that. But if you are going to take that route, I think looking at kind of using TA in combination with some, automated or some rule set, that the only purpose or only goal is to reduce your risk or reduce the volatility. I think in the long run, 3 months, 6 months, 1 year, 5 years, the goal for most Bitcoin and crypto holders really should be to stay in the game and to also stay invested. So if you can have some kind of rule, whether it's automated or not, or just a simple TA rule that's rebalancing you to 75-25 or whatever it is, right? Or some way to track monthly trends, I think a rule like that or an automation like that, I think would be massive. I mean, that's the type of thing that I think people should focus on. So yeah, I'm bullish on a lot of those, trading services or whatever it might be, right? Automated systems. Those are very popular in other retail products, but I don't know enough about Set to comment. I wish I did. I'm going to make a mental note.
That's fair enough. Yeah. Basically, it's basically just sets of tokens like, say, Ethereum and stablecoin or Bitcoin and stablecoin, and once certain moving averages are crossed or went under, it just basically rebalances. It's exactly what you described.
Yeah, I love that idea. I mean, it's fast. It's very cool. I think that's where people should probably be putting their effort if they're diving into TA for the first time. Right, that's the goal. Stay invested for the longer term. Have something that's reducing your risk as opposed to kind of tacking on more risk with your complex strategy.
Yeah, and Luke, just looking back since you've joined the space, and I mean, a lot of traders, a lot of investors in the space. And we don't really talk about the survivorship bias, right? Like the people that are still here. So what can you tell us about your friends in the space that are big traders, big investors that are still here? Are these the ones that made massive gambles and got lucky? Are these the ones that, to your point, bet small, kind of stayed in the game? Like, I just want to know about the people who we don't talk about, who aren't here anymore, and what they did wrong.
Yeah, I mean, man, survivorship bias is crazy in business and also investing. I think it's quite the mix. There are a lot of people who I bounce ideas off of, and I'm happy to always learn from. That I I don't want to say that I don't think anyone was lucky, right? Because it wasn't easy to be early or anything like that. But I imagine there's a lot of traders or investors that kind of do just have that. I guess that's their edge, is that they were so early. It'd be pretty hard to blow up a stack that big, or if you just had a significant holding going into 2017 or 2016 or 15, right? I imagine you're doing pretty well. There's also quite a few guys and young guys who are kind of my age and fresh out of college or came from the FX world that have cleaned up and done pretty well in 2018, 2019. The one thing that I think is consistent is just the ability to adapt, right? So like I mentioned before, alt opportunities and alt themes just really aren't around too much. If they are, they're extremely illiquid. So the exact same games of trying to play an alt theme every single month like you could in 2017 or even early 2018 just doesn't work. And there are a lot of traders who I used to hear from and see their work every single day, and I just don't see them really at all anymore. And maybe that's because they're just taking a break because the alts aren't here, or maybe that's just because they're out of the space. Whatever it might be, the ability to adapt and know that this is a long game. Getting rich in 1 month isn't going to help you in 2 years. So all those kind of things,
That's a good take. Survivorship bias is a killer.
It's wild, yeah.
Yeah, it's a killer. So, Luke, let's switch gears a bit. I want to talk to you about Bitcoin kind of as an alternative asset. I mean, you view it kind of as the only true alternative asset that everyone can access. How did you kind of come to this viewpoint? And I guess, is it the same view you had when you entered the space?
I'm really just trying to flesh this idea out more, and it lines up with both the way there's a chart that Pantera showed, and I used to get this book every single quarter from JP Morgan. It's called Guide to the Markets or State of the Market. I believe it's Guide to the Markets. And it would show you the correlation of all these assets, to each other. And it's this idea, I worked for a pretty active team and around Indianapolis when I was an intern in college, and I would see their strategy versus more of a passive, and their whole thing was in times of in turbulence, it pays to kind of have that downside protection and all these different things. But when you look at data during events where most of the market gets hit, assets that should be alternatives, right, or be uncorrelated, all kind of become correlated. And Bitcoin standing out as one of the clear, uncorrelated pretty much to everything else so far assets, right? It's not only one of the only assets that's kind of truly fulfilling its role as an alternative asset, but also in the sense that if you look at other alternative assets, right, what does the average person have access to if you're not accredited? You probably can't be investing in, long short funds or hedge funds or VC or those type of funds, right, that have access to those uncorrelated returns to traditional vanilla equities. And then I guess some commodities, yeah, you have access to them. I imagine you're still paying like a management fee. I just heard about some service where you can buy gold directly and they can ship it to your house. But it just feels like one of the only alternative assets that's not only serving its purpose, but also available to everyone. And I think that will become more powerful and will become more of a narrative. It already is, obviously, for Bitcoin, being so decentralized. But I think that is probably going to continue to allow asset and allow inflows to continue to flow to Bitcoin, right? It's just the most accessible alternative for any investor, regardless of whether or not you're accredited, regardless of where you live in the world. That idea is just fascinating to me.
That's a good point. I mean, I guess the question though is like, does the majority of people care though, right? I mean, because like the crypto echo chamber is small. We're all like highly educated on crypto, Bitcoin, altcoins, et cetera. But like the majority of the world and even the majority of America, like doesn't really care about the stock market or doesn't care about crypto.
Sure.
I'm just wondering, like, how do we actually educate them and get them invested? Because to be honest, for a lot of people don't have savings to put into this. A lot of people don't understand the stock market. Like, I'm just wondering how we convince them to allocate their savings to Bitcoin.
Yeah, sure. So I've also been thinking about this. So I'm planning to, well, most of it's already done. I've been working on this in the background, but I'm going to do a series on store of value assets. And the way that I think of it is, I would say, like you said, most of the world just simply doesn't care about their investments or their stocks or finance topics or gold or whatever it might be. But gold's still around an $8 or $9 trillion asset, right? And that's not because a ton of boomers or people care about it. It's just because that was kind of, that is the store of value asset. And I think in a lot of ways, store of value assets, the way that people choose to invest their money, a lot of times lines up with their interests, maybe more than them comparing the investment profile, right? So for example, let's think of someone who wants to, they want to invest in some kind of alternative asset, or they want to park their money somewhere. If they're interested in cars, right, they're not comparing that collectible car they're buying to a Van Gogh painting, or they're not comparing that to the return profile of gold or the risk profile of gold. They're interested in cars, and therefore they're investing in cars, right? The exact same as someone who does it with art. I don't think, sure, they might be looking at which artist, is that painting a good investment compared to this other painting, but they're probably investing in art because they're interested in art, right? So the same way, if you look at the demographic of people coming up now, right, increasingly interested in technology as technology just plays a bigger and bigger role in our lives, I imagine, at least my age group and my generation, if they're looking to park money, they're probably going to be looking more and more at digital assets. And so I don't think it's going to be one of those things where everyone is interested in Bitcoin, everyone's interested in investment topics. But my generation growing, it's that poll you see every single day on Twitter, and I think it's overplayed. But at the same time, what am I going to store my value in? Is it going to be gold, or is it going to be digital assets, which I understand to have more value, which on pretty much every metric I want it to be is better at being a store of value. So it's one of those things where I don't think we really have to convince everyone to care, right? Those other assets have done well enough with the world not caring. It's just going to be one of those slow transition things of people's interests, and kind of a generational change of those that are more inclined to be dealing with technology, working with technology, and interested in technology are probably going to be more interested in Bitcoin than the other options.
Yeah, I tend to agree with you. I mean, you're right. We definitely don't have to convince everybody. And, just thinking about the shift to Bitcoin, there's a lot of drivers out there that people kind of quote as, major things that could have a massive effect on Bitcoin, right? So not the slow grind higher, but these massive inflection points. Some people quote, the trillions of generational wealth that will cross over to, kind of our generation. And then there's other ones kind of as, the search for yield, would a recession drive Bitcoin higher? In your mind, what do you think is the largest potential Bitcoin driver when you think about these more macro type things?
Oh gosh, that's tough. I don't know. I don't know if I could attribute it to one thing. I could try to wax poetically about the macro shift and what would happen, but I'll leave that to the macro guys. I think I really do think that the store of value, that $21 trillion bucket of value that's being stored there, I think that, a massive amount of that, or even if it's not a massive, looking at Bitcoin as a $200 or $300 billion asset, you can think about such a small percentage of that money flowing into Bitcoin and kind of the effect that would have. I just think that it's going to be one of those generational things. And I don't know if it takes 2 years, 5 years, 10 years, whatever it might be. I'm not in a rush. I think that's going to be one of the biggest things. I also think that the easiest way, at least my thesis or how I understand and probably explain the macro environment, I think a lot of people will talk about quantitative easing being good for Bitcoin. And then they'll also talk about, all those different things that central banks, pretty much anything a central bank does, someone will twist it and say it's positive for Bitcoin. The way that I think about it is Bitcoin being, the only, one of the only assets that is absolute scarcity versus governments and central banks all around the world continuing to increase the supply of their money with kind of, no cap. That alone is the easiest relationship to understand. One asset has absolute scarcity, the other one has no cap, and every bank is pretty much a race to the bottom right now. So I don't know all the implications of how this is going to play out. I do think that just thinking about it from a supply side, what kind of effect is that going to have on the purchasing power of a Bitcoin versus the purchasing power of a dollar just over my lifetime, right?
Yeah, for sure. And, I think it's hard for people to kind of understand, like we spend so much time super zoomed in day to day. It's kind of hard to zoom out and understand shifts over decades,
Oh, it's impossible. I mean, it's like, especially because a week here feels like a decade. Like, who knows? You know what I mean? Like the last year or two, I felt like a decade. It is really tough to kind of have that, not only that patience, that conviction the whole time. It is tough. It's crazy.
Yeah, I think Avichal from Electric Capital, I believe he was on Palm's podcast and he was talking about that, kind of that long tail, those super rare events just that have huge payoffs. And I'm probably botching his take, which was awesome, but his view is kind of that we're just horrible at realizing changes over long periods of time because we're just so focused on second to second.
Yeah, it's just the human's perception of that time. It's really hard to, I guess, be present enough and be focused enough in the present to understand the opportunity and to execute on it, while at the same time then moving slow enough to give it the time horizon to actually pay off. I would be curious to hear that episode. I'll look that up.
Yeah, I got to find that. It was an awesome episode. And Luke, a lot of people in the space have chosen kind of a maximalist route. And I think that a lot of people do this because it's easy to be dismissive. And it has the widest reach because it resonates with the most people, right? Sure. Personally, I've never done that. I've always taken like the technologist view. I like Bitcoin. I like Ethereum. I like any innovation, right? But it seems to me just kind of ignorant to be dismissive of all the tech going on outside of Bitcoin. I'm wondering, like, what is your take here? Like, are you kind of bullish on the innovation, but we should kind of put Bitcoin as a bucket as like a real kind of financial asset? Like, I'm just kind of wondering how you think through the market with the two sides here.
Yeah, I definitely wouldn't say I'm a maximalist. I probably am I wouldn't even say I'm close to being a maximalist, because I think being dismissive of it doesn't really benefit anyone. I think it's great to be skeptical. I think being dismissive of what people are trying to build, really you're just going to be kind of blinded to some opportunities. 15 or 20 years ago, no one could predict Bitcoin. So it's hard to predict that we won't have some other form of whatever it might be, and whether or not money is the only application of blockchain. Maybe that's the case, right? But there's a lot of applications, exchange tokens or tokens that kind of represent a yield. Those type of things are pretty interesting to me, and I don't think BNB or Flexcoin or whatever it is. Maybe it doesn't need to be decentralized, but at the same time, or Leo, whatever it is, the token economics on some of those are still pretty interesting, in the sense that they, regardless of where they fall on the decentral, how decentralized they are on that spectrum, their investment characteristics are still kind of interesting, right? You're exposed to a different form of risk, potential different return profile. I'm not definitely not a maximalist. I am pretty skeptical of a lot of things, but I'm willing to see it, and me, if there's a theme there, I'll definitely trade it. So I'm open to everything.
No, that's fair. And to be honest, I think you have to be dismissive in the space, right? Because there's just so much going on, and the news flow and the updates are insane.
Yeah,
I just always thought that there's so much mind share in the room, and there's obviously signs of great projects being built, that I just hate when I see people not spend the time to look into it and then just claim that it's all a joke,
Yeah, scam gets thrown around way too much, and then it it takes away the impact of the word. And then when there actually is a scam, then someone can kind of hide behind you call everything a scam. I think we should be, but it's okay. I think for the most part, the community tries to kind of, I think we police ourselves pretty well. There's
for sure,
pros and cons.
Yeah, definitely. And Luke, you're someone with a huge following on Twitter, and I'm wondering, kind of adjusting for the bear market here. What's your take on the Twitter crypto echo chamber? Like, do you think that we're expanding the pie? Do you think people are getting smarter? Do you think that we're degrading? What's your take kind of on the crypto Twitter community?
Oh gosh, I don't know. It's one thing's for sure. It never gets old just kind of taking a step back and watching everyone. I think I did that this last weekend. I don't think I tweeted for a day or two, which is quite rare. Just kind of taking a step back and watching it almost like as an organism. I mean, it is fascinating, the ideas or the topics that the whole community will latch onto, and then everyone will give their take, and then there's always a battle based on this. I'm not sure. I haven't been around long enough, and I'm not in any way kind of important enough to Bitcoin or anything to have to say that we should do this or we shouldn't do that. I'm just kind of experiencing it and taking it all in, and I try to align myself with people who provide value and kind of stay away from people who mostly take value. I think that's one of the metrics that I try to use to continue to use this or to benefit from the community and to hopefully benefit other people in the community as well, is just align yourself with people that provide value, like yourself or Delphi or whoever it is that provides new ideas, has actual thoughts, and then the people who don't, I don't know. I think they kind of fade into irrelevance. So I don't know. It's so hard to say, right? Everyone says that the community is toxic. Sometimes it's actually entertaining, and I kind of like the toxicity. So I don't know, man. It's funny to watch, that's for sure.
Yeah, it definitely depends on what kind of mood you're in.
Yeah, exactly. It's you can go through a whole range of emotions in one day watching the timeline.
Yeah, I know. It's like you have your coffee in the morning, you're all ready to argue and get involved, and then come like 6, 7 o'clock at night, you're like, I just don't care.
Yeah, it's hilarious. Who proposed it? You tweeted out and you said, who do we have any questions or what should we talk about? I saw Tyrone, one of the most positive dudes on Twitter, and if I ever see him pop up on the timeline or if we ever talk in DMs, one of the most positive interactions. And then 5 minutes later, right, I can post an idea about Bitcoin, and some guy tells me that I'm the dumbest person on earth for being bullish here, and why this means this, and it's just hilarious, the spectrum of people you interact with. It's like it never gets old, man.
No, I couldn't agree more. And Tyrone is literally, we got to give this guy a crown or something, because he's the most positive guy I've ever met in my life. We have an episode with him, actually. If people scroll back, he is really just a breath of fresh air. That's
what I'm saying. It's one of those value things, man. I think he just focuses. I'm not sure if that's his what his rule is or whatever it might be, but I think that's definitely his intent, is provide value, and I think it comes back tenfold. I mean, he's taught me a bunch with his free jewelry, so yeah, man, it's just one of those things. Tyrone's a great example of it.
You got to focus on people, man, because the projects and the tech change so quickly. The people don't. They're here, they'll stay. You got to focus on the people, and that's why I love that Tyrone does that.
Yeah, for sure.
So Luke, just switching gears a little bit here, we got some Twitter questions and I have a couple other ones. So, going back to Tyrone, he was kind of asking about Decred a little bit. We've done a report on Decred. For those who don't know, it's, kind of dates back a bit, but hybrid proof of stake, proof of work, competing to be a store of value, has a treasury that's really easy to use. Token holders can use Decredition to vote on ideas to use the treasury, and protocol upgrades. I guess Tyrone was kind of asking your take on Decred, if you have one here.
I don't really. I am pretty fascinated hearing Joel and Chris Berniscu. I think have spent a ton of time. They made that thesis public a while ago, I think, when they made their investment into Decred. So most of what I know is actually by listening to them kind of talk about it. I listened to Joel's show a while back with Laura, one of the original shows with her. And then I spoke to Chris for a while earlier in the year as he kind of categorized Decred as a commodity money. Hopefully I am using the correct taxonomy there that he did, but I think he was looking at Decred, Zcash, and Bitcoin, and a couple other ones that are these kind of these commodity monies. And I think it's interesting in that way. I go back and forth with coins that are potentially vying to be a store of value as well, or whether or not Bitcoin is kind of the apex predator, and there can only be one store of value, and right, there's only one money that kind of wins out. I go back and forth with that. I'm fascinated by it. I think that the Polita, whatever it is, that voting system, I've played around with that. I think that's very cool. I jumped in their Slack and realized that I had nothing to add, so I hopped right back out. But I think I'm fascinated by the project. I wish I knew more. The frustrating part is it just doesn't really get any volumes. There's not really a trade there for me, but I'm fascinated by the project.
Yeah, no, same here. I mean, I covered it at 51% a while ago. We have a Delphi report on it that my partner Neil and Jan led, which is out recently. People should definitely check that out. But I had Jake Yoakum Pyatt, who's one of the original co-founders, on months ago on the podcast. And it was some super interesting takes that he had kind of at a philosophical level. But I mean, I asked him probably a similar question I'll ask you now. I mean, it's only 10 years of Bitcoin's life, and you have these new projects like Decred that have things that I'd argue that Bitcoin will never be able to implement for good and bad reasons, right? Because you have strong consensus around social contract and it's hard to change. But do you think that the market's decided and Bitcoin is a store of value, or do you think that the door is open?
I mean, I think the door is always open, right? I think it's non-zero, the possibility. I haven't fully walked through, or I've tried to, but I just also realized that I maybe don't understand all the implications of if something like Decred were to challenge its status, or if there even could be, another crypto, a commodity money kind of replacing Bitcoin in that sense. I think if the faith was lost in Bitcoin, or if that system worked, I just don't know if enough people could buy into something else, is kind of the way that I've always thought about it. But at the same time, the way that they talk about the consensus and how kind of it's a project that's always going to be able to fund itself, and the different way to enact proposals where Bitcoin's already, we've seen some problems can arise. I know Bitcoin is it's handled all those, and it's kind of a cockroach in that sense. It's always going to get stronger, right? But at the same time, who knows, 5, 10, 15, 20 years down the road? I don't know. I think it is non-zero. I don't think you can write it off just yet. What do you think about it? What did he say about it? Do they view it? Do they position it as we are attempting to replace Bitcoin, or do they think they can coexist?
Yeah, it's a good question. I mean, I don't directly recall his answer, but I mean, I think the majority of people in the space that are competing with Bitcoin or Ethereum or others, they always play the nice card, right? We're not competing until they are, right? And in my opinion, you've seen that most obviously with Bitcoin forks, but you've also seen that with potential ETH killers, right? Like, a year or two ago, Polkadot was marketed as a friend to Ethereum, and now they're rolling out smart contracts, and they're rolling out frameworks so you can just port over your ETH applications and run them on Polkadot's parachain. So, I think it's a worthy experiment. I think they're doing a lot of cool things, but I think the playbook for most people is be friendly until you have to actually get competitive.
Yeah. And I just don't know. I don't know how that would look. I don't know if another platform could scale fast enough. I don't know if another network could ever be as decentralized as Bitcoin is, right? Those type of things. There are some things that even if they do add more features, I think will be hard to kind of ever hit some of the metrics that Bitcoin has hit. And I know Bitcoin, like you said, it's enacted or has some things at the protocol level that Bitcoin just doesn't. But at the same time, Bitcoin, I think, has even if it's only 10 years old, has achieved some metrics that other coins won't be able to. So it's no, for sure. I mean, it'll be fun to watch play out for sure.
Yeah, and look, I definitely agree, right? If Bitcoin somehow failed, I don't think it will, but if it somehow failed quickly, everybody's trust would be lost in the space.
Exactly.
I think.
Yeah.
Yeah, that would be terrible. And just switching over, one more question from Draculasi on Twitter. I definitely botched that, but he wanted to hear your thoughts on Zcash, if you had any with the inflation drop. If you had any thoughts there.
Oh gosh, I have zero thoughts on Zcash, and it's only because that's the one coin. I feel like there's one coin that you just never trade, and you're kind of thankful for it. There's also probably one that you've traded, every single time and just never managed to make a profit. Zcash is one thing that I've never owned a Zcash, and looking at the chart, I don't know if I ever will. I can't figure out why it underperforms so much. But it's been trending down ever since I've been here. And that's like, I can't figure it out.
No, look, I agree. I mean, they've had a lot of arguments vocally recently on their treasury and funding that, right? But I guess the bigger question is, do you personally think that a coin where privacy is the main feature is worthwhile of being its own coin?
I used to, yes, and I do think that privacy is important. But it's clearly, I think even if you look at Zcash's numbers, and I don't know these off the top of my head, I don't even think that the majority of the transactions on Zcash are shielded. And then I've heard Ricardo Spugni and a couple other people talk about if private isn't the default, right? Then eventually they kind of are traceable. And we're already seeing things like Grin had that pretty serious mix-up like a month ago where they basically admitted, look, you can trace pretty much everything that's going on, and that's something that we need to work on or fix. And so it's one of those things where, I don't know if that's the case for Zcash. I am by no means qualified to say whether or not they have the best privacy technology or the second best or whatever it is. I think Bitcoin is maybe going to be, I hear about features being commoditized a lot. I know Bitcoin is working on those privacy features. So maybe Bitcoin implements something, I view some alts as kind of a test bed for features that Bitcoin could add. And I think that would make a lot of privacy coins irrelevant. At the same time, if Bitcoin never goes down that route, or if adding that privacy later on doesn't really help, then sure, maybe these things can have value. But I mean, the market is pricing Zcash clearly enough for me. That story is being told. It has never gone up for a month that I've been here. So we'll see. If that changes, I'll be interested.
No, that's a fair take. And Luke, I could talk to you for hours, but we gotta shore this up so we could do another episode with you. But my last question is Bitcoin at 7,300. What are we thinking here?
Oh gosh, I'm bullish. I was a buyer going into the weekend at 7,400, and I'm watching my screen tick lower $1 like as we're talking, $1 every second, I should say. I don't know. I think that one of the most fascinating things is this plus token situation or narrative, I guess you could say. I don't think it's a narrative at this point. And people, pretty openly talking about this person has to get rid of X amount of Bitcoin, 2,000 or 200,000 or whatever it is, some ridiculous amount of Bitcoin that just continually is being sold on the market. So that's one of the things that I guess makes me hesitant or whatever it might be. I also, want to be kind of clear, and it's why I kind of wanted to start the TA discussion with this. A lot of what I do really isn't trying to time the top or the bottom. I want to, if there's an uptrend, I want to be exposed to the uptrend, hopefully as long as possible. I'm aware that I'll probably be holding on to it a little bit too long, and maybe I jump onto the uptrend a little bit too late. My goal is, though, month over month, that I'm definitely, just not taking, I can't experience an 18 or 20% drawdown like November had, right? So I haven't been interested really in a Bitcoin play since 87 or 9K. We're down 20 or 50% since 14K since this summer. So I am interested here. I'm also comfortable being wrong another 2% down and having to wait. So we'll see. I'm bullish. I'm cautiously bullish. But it doesn't look like there's a lot of interest. But it's so hard not to be a long-term bull at 7,300. I mean, it's near impossible for me with this conviction.
Yeah, I mean, I'm seeing people leave the space and send me emails that they don't see any reason to be here, and that's usually around the time when I start adding. I mean, yeah, it's at 7,300. I mean, it's ridiculous. We're still up 2x on the year. I mean, come on. But that's the thing. It's a roller coaster, right? And that's one of those things where if they have some kind of system that just helps them rebalance or automate or whatever it is, that keeps them in the game, right? Everyone compares and says, "Oh no, you should hold. You're never going to beat Bitcoin." Well, if you're holding Bitcoin and that shakes you out, maybe just trying to reduce your risk, even if it gives you a lower return, that keeps you in the game. So I hate to see people going. You send them an email back, man. Get them back in. 73 isn't so bad. Yeah, you're not wrong. And last question, Luke, what do you think about the halvening? Do you think that this is something that will actually drive Bitcoin's price up, or do you think that it'll kind of be a non-event? Because I think historically it's somewhat mixed.
Gosh, it's so hard to say. I mean, you look back at the other halvenings, it's like, was that really the halvening that drove price, or was it just what Bitcoin's been going through anyways with parabolic growth and more awareness and network effect kicking in? That's one of the things that I've been toying with a lot lately was, whether or not the halvening was kind of the serious play there. I think it's pretty clear, after the halvening, the supply is being cut in half and demand still plays a massive part of the equation, right? I'm not a diehard believer in the stock to flow. I think it's a fascinating model. I think it's interesting. I love Plan B and his analysis he puts out. I just think that there's maybe more to the equation. I do think it's positive that less supply will be hitting the market each month. But at the same time, I'm not sure I could look at the halvening and say it has to be at 100K because it's halvening. I think that long term, right, the monetary policy of Bitcoin is one of the most fascinating things about it and one of the most bullish things about it. But one event, one halvening, I'm not sure that that's rocket fuel and a sure bet. So we'll see.
And Luke,
happy to be proven wrong there.
No, I agree. And Luke, we'd be remiss if we didn't talk about your show for a little bit. I mean, you've had on some extremely great guests. You ask killer questions. Could you tell people where they could tune in to see your store value thesis? I want to make sure people have access to that.
For sure, man. I appreciate it. Yeah, I'll be on the Coinist podcast. So Venture Coinist is the tag. So Coinist, venture capitalist, but we're investing in new types of money here. So Venture Coinist podcast, and I'll be doing a store of value series. So we're going to be looking at all those different store of value assets, that $20 trillion of money that's floating around, and high-end collectible cars, and gold, and art, and real estate as a store of value, and then obviously Bitcoin at the end. And looking at why people invest in those assets, and then, like I said, with our generation, I think it's going to be just kind of a generational transfer of interests as well as wealth and money, and where those inflows are going to come from. So you can catch it on Coinist Podcast. Follow me on Twitter. I'm sure I'll tweet it out. I'll have it on YouTube. I'll have it on everything. But yeah, man, I appreciate it.
Yeah, man, it's actually pretty cool though. I mean, you're making the pie bigger. You're looking at other assets outside crypto and then relating that back. That's definitely a good way to grow kind of the pie and the interest.
Yeah, I mean, I'm interested in some of those things as well. I like cars, and you can only talk to so many exchange owners and funds, and especially when the market's a little bit sleepy. I figure let's spice it up a little bit. Let's talk about some Ferraris, investing in those too. So, we'll see.
Hey man, if you ever land a Bugatti Chiron and you need somebody to test drive it, I'll be here.
I'll keep that in mind.
Luke, thanks so much for your time and coming on, man. It's always fun.
Tom, I appreciate it, man. Until next time.
Hey everyone, thanks for listening to the podcast. If you enjoyed it, please support the show by hitting subscribe on iTunes, writing a review, or sharing this episode on Twitter and LinkedIn. And stay tuned for our next episode out soon.